Welcome to another major market movements end of the week market review for August 21st, 2015. I'm Quad G, and in this video we're covering the PM complex, starting off here with gold. And as you can see, gold comes up and takes a pause right here just below this key multi-month descending trend line all the way back here to the January top. And it's testing it a third time, which means that if we did see a correction come down here in the next few weeks, it'd probably take a couple weeks maybe to correct from a rejection here. The next time it came up would more than likely be a rule of 4 breakout to the upside possibly. So we'll be watching for that scenario. But for now, it looks like gold could be stalling right here at that trend line resistance. It certainly has moved up very quickly and could be in some overbought territory. As you can see here with the QG3, the price has come up. We've closed 1, 2, 3 days above the upper Bollinger Band, and we also have the 3 EMA closing basically right next to the upper Bollinger Band there. So this is getting a little bit frothy in price action to the upside. I would doubt that we would get a fourth day close above the upper Bollinger Band before it pulls back in into at least a dip, short-term correction at a minimum. I think it could, any correction that does come down could possibly test the 20 DMA, which has curled around and started to advance to the upside. So any correction, I would want to see it to maintain a midterm bullish posture. I'd want to see that price bounce off of the 20 DMA if it is indeed tested. On the weekly here, we got this fall through candle to the upside. As I mentioned last week, we had the inside double key reversal on the weekly, and now we're seeing the follow through from that bottoming candle to the upside. I think we could see maybe a little bit more to the upside if we stay above some key supports, maybe on Monday, but I would be leery of it just going like gangbusters to the upside all through next week. I don't think that's what we're going to see. I do think maybe there's a possible chance of a little bit more upside on Sunday, Monday, and then maybe a turn back down into a correction for at least a few days, possibly a couple weeks. The EWO here, we do have a positive divergence on the top side of this oscillator. As you can see, the oscillator EWO has a new higher high compared to the last swing high, which is right here, but the price is still at a lower high. So we got the positive divergence on the top side there, so that's bullish. So even if this market was to double back very quickly and come all the way down and maybe even produce a new lower low, more than likely that's going to set up a positive divergence in this oscillator at that later date. The RSI2 has come up, just a complete flip, which is unusual to see such a radical flip like this from deep into oversold territory below the 20 level all the way back up here into 70, which is also a key level of resistance too for the RSI. Just buzzed right through the 40-60 area. And the weekly MACD is still open to the downside, but histogram bars are shrinking here, which means that the signal line is coming back up to the baseline. That's the weekly, and the daily is wide open to the upside still, as you can see. So overall, gold's still looking very bullish here. Wouldn't be surprised if we saw a little bit of sanity come back in, and we pulled back in for a dip at least going into next week. That wouldn't be surprising at all. And then from there, based upon the attitude of that dip, it should tell us whether or not this is a we're getting a simple correction before we advance higher, or we've sealed in a midterm top here, and we're going to see the price collapse back down, possibly below 1080 again, maybe down into 1040. That's a possibility. Okay, let's move on to silver. Okay, silver here. It's stalled here right at the 38.2% Fibo. There is still a inverted head and shoulders pattern here. This being the right shoulder that's finished. So really, we're tapping on the neckline here of this inverted head and shoulders pattern. This could be just a short-term little dip, even though it is a outside key reversal, as you can see here. So there might be some a little bit more follow through to the downside here, maybe down into 15. There's some support there at the 20 DMA. And then we'll see what kind of reaction we get off that $15 level. That might present a really good buy opportunity for another charge to the upside. If we come all the way back down and we break below this swing low here at about 1474, then that would upset the picture enough to suggest that we may be in for a larger correction. So two key levels to be paying attention to going into next week. The QG3 here is in a bullish alignment to the upside. Again, the 20 DMA has turned around here and started to march upwards. So watch for the price to come down, test that 20 DMA. If we get a nice rebound off of that, I would say that would be bullish. A good point to be getting in on the long side again for a potential breakout above that neckline, which could project the price all the way up to about 1690, 1680 maybe in the next week or two. Silver on the weekly, we've kind of stalled out here with a long-legged doji or long-legged spinning top. So no clear direction there other than mark the points, the highs and lows of this week are key levels of support and resistance. You break above those points and you could get some substantial follow through to the downside if it breaks to the downside or to the upside if it breaks the high of this week, which was at 1566. The silver on the EWO, really not much to show you there. And on the RSI, we've come up, we've tagged the 60 level, and unlike gold, it just hasn't had the robust energy as gold has, and so it hasn't been able to break that 60 level yet. So we're just inside this neutral area between 40 and 60 right now. On the weekly, the MACD is still open to the downside, though closing out some. And on the daily, still open to the upside. All right, so silver still got some potential bullishness to the upside, though I'd like to see it maintain support right around the $15 level, and that may be enough to cause the price to swing around and march up with another impulse. Let's take a look at platinum. Okay, so platinum's taking a shot up here. It's just want to take a look at it from an Elliott wave standpoint. Oh, wrong one. So it looks to me as though we have a wave one here, a wave two, looks like a sharp wave two, And now we could be working on a wave 3 advance. And this could be a subwave 1 of that 3, and we could be pulling back into a subwave 2 here. There is this kind of a gap, manic move to the upside right here, right around a $1,000 level. This wave 2 could come back and maybe fill that in a little bit. That is a possibility. But as long as we stay above this swing low here at, let me get a mark on that. That low's at 979. If we stay above that level, there's a good chance that we'll continue to see more upside from there. The MACD, or excuse me, the QG3 is still in a bullish alignment to the upside. We closed above the Bollinger Band a bit, and we're pulling back in. And that's fine for a correction. The 20 DMA is turning around here and starting to move to the upside as well. That's going to be a key level of support as it moves higher to be watching for. Overall, things look like things could be turning around here for, to be midterm bullish as long as we stay above that 20 DMA, especially on a daily closing basis. The weekly, we had the outside double key or not outside, inside double key reversal last week, setting a key low and a bottoming candle, if you will. And now we're seeing the follow through to the upside this week. So that's looking bullish. The EWO here does have a positive divergence on the top side also now, as we're seeing a higher high in the oscillator, even though we have a lower high in the price compared to this last swing high back here. So that's positive. The daily RSI, we come up here, we're testing the 60 level, just a small incursion above, but we're kind of taking a pause right there right now. I'd want to see it break through there and touch the 70 level at least to really secure the idea that maybe we've got a midterm advance to the upside taking place right now instead of later. Let's see, that's the hour. Let's move to daily MACD. Daily MACD is open to the upside. That's bullish. Weekly, still open to the downside, but closing out as well, similar to silver and gold. So, yeah, for the platinum overall, idea here is that we could get a small correction next week, but from there, based upon that correction, how it forms, we could still see some more upside in wave 3 of 3 impulse to the upside coming up after a dip. Let's take a look at the Elliott wave charts. All right, here's gold. This is the micro count that we've been building off of, and looks like we got wave 1, wave 2 black here, and then sub 1, sub 2, 3, 4, 5 of 3 could be in, or this also has the potential of being a C wave, so we could have an ABC complete as well. This is a good point to be just taking some profit off the table just in case it's a wave C. There is a good chance that we could get a correction down into a wave 4 at a minimum, and which, since I'm here, I want to double check something here. Let's do a Fibbo retrace. Bear with me for a minute. I'm going to pull a Fibbo retrace here from the bottom of wave 2 to the top of wave 3. So the 38.2% Fibbo would be a key level support for wave 4 potentially on a pullback. So watch for that. Could it come deeper? Absolutely. It could come all the way down into the previous wave 3-4 zone, which would be 1109 to 1126. So that's another potential spot for wave 4 to end before another wave 5 to the upside. Or this certainly could be something far more aggressive as well. This could be a larger degree 1, a larger degree 2, a sub 1, a sub 2, and then you got 3 of 3. Crazy advance to the upside in wave after this dip. So whether this is a 4 or a larger degree subwave 2, whatever the case, you're going to be watching for potential turnaround, a three-wave correction down into the support area, and then a possible turnaround, which you definitely don't want to be out of. Definitely want to get in on the long side. The only thing that would really throw that projection out the window is if we got a quick, very strong impulse to the downside that came all the way down here and tested or broke the 1109 level, the bottom of wave 4. You see a sharp impulse that comes right down here or even exceeds it. That's a pretty good sign that we don't have a wave 4 here. We could actually have wave C in place, and we could have a stronger, longer sell-off soon thereafter that could dip all the way down into the 1040 area, as I mentioned previously. All right. I want to back out here on this and show you that we're getting a pause right here at this trend line being tested a third time. So even if we do get a pullback into wave 4 or a larger drop into a lower low, the next time we come up and touch this line, there's a very strong possibility of a rule of 4 breakout to the upside. So really, we're in a really good territory. If you're interested in being in the long side of this market, there really isn't a better time. I really don't. I think this market has done the majority of its selling off, and it's just a matter of confirming a major bottom. Whether it could be in here now, that's certainly possible, or the next drive to the downside, that would be, in my mind, even a better candidate than this one. I'm not saying this can't be a major bottom. I'm just saying if we got a lower low, that would set up even a better looking bottom than what we got going on right now. So we'll see what we get. Anyway, exciting time to be in the gold market, in the precious metals complex, as one way or another we're entertaining the possibility of a major low and a strong move to the upside. Okay, so some of you may know Metals King on the my forum here at Major Market Movements. He's one of the main contributors there at the on the public forum, and this is one of his ideas. That he doesn't draw any charts, but I understand his Elliott wave lingo enough that he's looking at this as a possible ending diagonal, and I can't write it off as a possibility. It's certainly possible. You could have a wave 1, wave 2 sharp. I don't favor this as a corrective move to the upside, simply because it looks like 5 waves more than it does a corrective pattern. But we'll go with it. We'll call it a wave 2. Or the other possibility is you could look at it this way. It could be a wave A, B, C, possibly for wave 2. So you got a kind of a flat correction, a contracting flat correction. Wave 3, wave 4, which is would be sharp to the alternate wave 2. That's another possibility. And then you've got a 3-wave move to the downside for wave 5, for an ending diagonal. So no matter how you want to count it, that particular count is valid. Really, the only thing that would write it off would be a new lower low, and with that, that brings up another possibility, set of possibilities for another Elliott wave count that would finish down in maybe the 1040 area, which I think I have that on my next slide. But I want to point out here, if this is an ending diagonal type scenario, it would mean that we should get a strong move to the upside that taps on or breaks the origination point up there at 1428. That was the origination of wave 1 to the downside. Okay, so pretty good potential if that was the case. Let's move on. Here's gold. This is the COT, commitment of traders log I got going on. And as you can see, even though with this move to the upside, the strong move to the upside, the gold shorts are more or less flat. I mean, they've peeled off a little bit of their position, but not a whole bunch compared to these other moves to the upside in recent history here. We've seen these moves to the upside, and we've seen a stronger move to the downside in the total number of shorts. We're not seeing this go around, and it makes me wonder if we don't have perhaps some dumb money in here that on the bear side that is white knuckling their position, holding on with the belief that this is just a little bounce, and then shoot, maybe they'll even tack on some more shorts now that we're up here and try to drive it to the downside. Um, but however you look at it, there's lots of room to the downside in the total number of shorts. So that means there's plenty of room for squeezing to the upside the price if we start taking out those stops. And it's very possible that there is a good number of stops sitting just above this trend line. So if the bears don't reassert themselves very aggressively here going into next week, and they allow that price to come up too far, especially above 1180, I would say you could initiate a fairly strong short squeeze there and cause a lot of shorts to have to buy to cover. And if that was be the case, I wouldn't be surprised if we came well up to 1230, maybe even higher, maybe even up to 1260. Certainly, we had this manic drop to the downside right up here at about 1260. That would be a potential target if you were able to take out, I would say about 1180. So we'll see what we get. Okay, so this orange trend line just needs to be adjusted a bit. We'll put it back here. So we're testing that orange trend line. Again, we could be just getting a small pullback before another surge higher. But if we got that another surge higher, look what we got right up here, right at about 1240, 1250, something like that. We've got potential of a fourth wave, or not a fourth wave, but a fourth test of this major resistive trend line that's been tested 3 times already. So that could eventually lead to a rule of 4 breakout to the upside if we got that test sometime soon. Also, want to point out here on the RSI, we were looking to get long down here because we were underneath the 20 level, which, as I pointed out to you, was a really good spot to be getting in long because the price. The other times that we've hit this $20 or 20 level on the RSI, we've hit some significant bottoms here, and so this pop to the upside is no surprise to us. And this has been fairly strong, as you can see. We've busted right through the 40-60 zone, and we're already testing the 70. And you can see here, once we've come up to the 70 level and a little bit above it, we start to run into some resistance. And just above the 70 level, you can see we've secured some significant tops here, 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 and even here. So we could, in due course, if we do start to penetrate above that 70 level and start to develop a possible negative divergence above that 70 level, that's going to be a clue that this run to the upside is done and may cause a stronger pullback to be seen shortly thereafter. All right, silver, also the COT, commitment of traders. They're backing out some in the short position. Open interest is also declining. So that's a indication to me that the shorts are getting a little leery of this move to the upside. There's still plenty of room to be squeezed. You can see that some of the significant bottoms back here, we've squeezed it all the way, or tops, excuse me. These tops have seen the total number of shorts come all the way down here to the 13,000, 14,000 level, and we're currently sitting up here at about 46,000 contracts. So it's possible. There's plenty of room to be squeezed to the downside here. So there's still plenty of room for the price to get a squeeze to the upside, maybe come up here to test the 17 or even $18 level in the weeks ahead. All right, silver here. This is the midterm count. This is very similar to that gold count that I showed you. I'll call it the MK ending diagonal count. Very similar count, but not quite yet complete, as we've got a wave 1, wave 2, flat, wave 3, wave 4, and now we're working on a sloppy, choppy wave 5 to the downside. And my suspicion is that we're currently working on a wave 4 move to the upside. It's going to come into resistance right here at the blue trend line. Currently above here, it's about 1655. So it's going to be key level resistance, though it's also being tested a fourth time. So a combination of things here. This could be a rule of 4 breakout to the upside. That's certainly possible. Or if the Elliott wave is true, this is just the completion of wave 4 before we get another one more last plunge to the downside. Maybe to finish off the Eve move to counter the Atom move, and we could see the price come down here into maybe the upper $13 level at the most. And then once that's complete, then I don't think there'll be anything in silver's way from making a massive move to the upside. I would not doubt that it could come up here to $24 fairly easily. Maybe even doubling the price. So if we doubled the $14 level, that could shoot us up here maybe to 27 to 28. That would not be surprising. So yeah, before 2016 is finished, I think we're going to see, if we're not at it already for a major bottom in silver, we could see it here fairly soon, maybe in the month of October in 2015, a major low for silver before we get a major advance to the upside. All right, here's another short-term projection. Here's a neckline. Here's the left shoulder, head's in, the right shoulder is in. Now we're waiting to see if this neckline is going to break to the upside with a $1.40 in potential from the bottom of the head to the neckline, and move that to where the neckline could be broken, maybe say around 1550. Tack that on, $1.40 to that, and you come up with a potential target of 1690-ish based upon the inverted head and shoulders projection. Here is the short-term count, the micro count for silver. We've got this ending diagonal that finished, and now we're starting a fresh wave 1 to the upside, or possibly a wave A. Then we got a wave 2 to the downside that's sharp. Now I think this is a sub wave 1 that completed, and now we're working on sub 2. And I wanted to point out that I moved my Fibbo. Darn it. Yeah, that's close enough. All right. Wanted to point out that this zone here between about $15 and about $15.10, $15.09 is pretty vacant. You can see that there wasn't a lot of time spent there in that small little 10-cent zone. So I would prefer that wave 2 spend a little bit of time down here kind of filling in this this manic space where you've just had strong swings up and down right through it. It would be good for market dynamics for the long term, to form a good solid base. For silver, if wave 2 came down here and spent a little bit of time down here, maybe a majority of a day at least, right around the $15 level, that should clean up this move to the upside really well and allow for a stronger base to launch from into wave 3 of 3 to the upside. The orange trend line is also going to be a key level of support, as well as the 61.8% Fibo. Actually, that's from, actually disregard that Fibo because it's really not active anymore with the subwave 1. So I'm just going to get rid of that. But anyway, so look for potential support right around here in the $15 to $15.10 area. And also, as I mentioned earlier, the 20 DMA is right there as well to add a level of support. So we'll be watching for that next week. All right, moving into GDX here. Called the bottom here. It looked really, really well. With this capitulation to the downside. We had the largest daily volume ever. That told me that this move to the downside was going to be limited, and we should be looking for to get in positions to the long side. And sure enough, we got the this post flush distribution accumulation area worked out perfectly, and now we're starting to see the recovery to the upside. I do think. So we move in here. Let me back out. Actually, I want to see something else. A major bottom in GDX could be in here. There's also a possibility this could be just a wave 4 bounce before another turn back down into a lower low. So we're really not certain whether or not this is a major low for GDX until we come up here and break above 21. That would be our first sign that this major low is indeed finished. Where was it? Okay. All right, let's move on. Here's the QG3 for GDX coming up here. The QG3 is in a bullish alignment to the upside. We're ducking back in out of spending some time, a little bit of time above the upper Bollinger Band. It's possible with this outside key reversal in the price, we could see some follow through next week to the downside, just a corrective move. But the 20 DMA is going to be a key level of support as it rises. Right now, it's currently at about 1422. Previously, we've seen the 20 DMA pose as resistance, and before that, pose as support with that move to the upside. So, key level of support going forward for the continued midterm advance to the upside. Here's GDXJ, pretty much in the same boat. Could see a corrective move to the downside, maybe test the 20 DMA, and then maybe a strong move up out of that, as this could be just a higher low. Also should point out that technically we do have 5 moves to the upside complete with wave 1, wave 2, wave 3, wave 4, and wave 5. That's certainly very possible. A more aggressive count would suggest that you've got wave 1, wave 2, a sub 1, and we're working on sub 2 before a 3 of 3 advance to the upside. Either way, the 20 DMA is going to be a key level of support. So might present a good buying opportunity once we get down to it. All right, here's the micro count for GDX. We got the wave 1 to the upside complete. We got a corrective move to the downside into wave A. So far, we've only got 3 waves up into wave B. This could be an extended wave B. And now we're working on a wave C to the downside. And that If it's a running flat type correction, it's possible that wave C could end, maybe fill in this gap right here, could end maybe around 1478, or 1480, somewhere in there. Maybe, yeah, 1480-ish level looks possible for a running flat, fill in that gap, and then it may uh, go into a wave 3 advance to the upside. However, the other possibility with an extended B type correction is you get an expanded flat. Instead of a running flat, you get an expanded flat. An expanded flat could see the price come all the way down here to the previous 3-4 zone, as well as test a 61.8% Fibo there at about 1397. So we really don't know what we're going to get with that just yet, but we'll be watching to see what the market does with this gap here. If it completely ignores it, then more likely we are moving in on an expanded flat for wave C of 2. But once that's finished, we got a wave 3 to the upside advance is what I would be expecting from there. Okay, so that covers our PM complex coverage for this week. Hope you all have a great weekend. I'll be talking to you later. Adios.